Hey, it's Craig back with another Mortgage Minute. And today I want to talk to you about capital gains tax. I know that's an exciting topic, right? Listen, the reason I'm bringing this up is I get asked the question a lot like, hey, listen, I know there's such a thing as capital gains tax if I sell my house. But if I take all of the proceeds from the sale of my house and put it into the next purchase, doesn't that help me avoid capital gains tax? And so let's talk about that. But before we do that, just so that all the attorneys in the house understand, I'm making a huge disclaimer here, okay? I'm not a tax consultant. I'm not giving tax advice. If you have specific questions about a potential tax liability as it relates to capital gains tax, you most definitely need to talk to a qualified professional. And that qualified professional is not me when it comes to taxes. With that said, let me tell you some things that you can look up on the IRS's site and you can see the exact same information. First of all, capital gains tax relates to when you sell your house in a short time period. And that time period is generally defined by the IRS as 2 years. So if you keep your house for 2 years or longer and it's been your primary residence for 2 years or longer, the IRS looks at that and says, you know what? Even though you did make a gain on that house, it wasn't really an investment for you. That was the house you lived in. So therefore, there's not a huge need to have a tax burden for that. Now, there's limitations to that, okay? So I think for right now, for a single person, you can be exempted up to $250,000 for the gain. And if you're married, I think it's 500,000. Again, you need to talk to your tax professional about your specific situation. But if it's your primary residence and you own it for at least 2 years and you turn around and sell it, then you are most likely going to be exempted out of any capital gains tax. If you, whether it's your primary residence or not, own a property and sell it for less than 2 years, so you've owned it less than 2 years and you turn around and resell it, you may be subject to a capital gains tax. And it doesn't matter if you're going to take the money and put it into the next purchase. There is one exclusion called a 1031 exchange. That's a totally different topic and very complex. But that aside, listen, you can take your money and go to Vegas and bet it all on black. You can take your money and put it all into the next purchase. If you sell that house within 2 years, you are most likely going to be subject to a capital gains tax. And if you own a property and it is not your primary residence, and it doesn't matter how long you own that property, you turn around and sell that property, that is, generally speaking, a taxable event to the IRS, and you will most likely be subject to a capital gains tax. So hope that helps. I hope that clears some things up. Most people, if you ever see a listing and it says, hey, we can't close until August of 2023, a lot of times what you can do is you can go and look and see when the seller bought the home, and you realize, oh, you know what? They're trying to get past that 2-year mark to not have the capital gains tax. I will say this, the capital gains tax for some people is not an extraordinary tax. It's not a ton of money. So there are some people that choose to go ahead and sell within that 2-year period for various reasons. Maybe they got relocated, job change, things like that. So listen, I know that's a lot, but I wanted to share that because we do get that question a lot. So any questions you've got that we can help with, give us a call, 615-498-5626. And I appreciate you watching.